Yeah.
I think the next thing that we should talk about here, we shared a video earlier this week talking about the tier list of assets. I don't know if everybody had a chance to watch that or not. It was a fun one to make. It was a little bit longer than we had anticipated.
It was
Had
so
a couple
good.
debates on there. But one of the things that really stood out in terms of reading through the YouTube comments was Tesla. There's a lot of Tesla lovers that watch the channel here. So I figured we could spend a couple minutes here talking about why we decided to put gold. That was the big question mark from people. Why is gold in a higher asset tier than Tesla? So who wants to start the conversation here?
You want to start for us?
Sure. Yeah. I mean, the thing is when you're looking at investments, you have to evaluate risk and reward. There is more reward potential to Tesla than there is to gold's price, but there's more risk with Tesla. What happens if there are robo-taxis? What if Waymo is a better option for robo-taxis? What if Figure One is better than Optimus? What if they end up just being a car company? I mean, people just assume, people bake in. I mean, that's why their PE ratio is like in the hundreds plus on Tesla. They just assume these things are going to work out because they have had a lot of success beating the odds with the electric car company in the past. They've been phenomenal at that. But an electric car company is not a very good company, to be honest. So that's why they push for things like AI, robo-taxis, Optimus, robots. These are much more profitable businesses to be in. So they're trying to skew their investors into thinking that's possible, and 100% it's totally possible, but that doesn't mean it's going to happen, right? 100% possibility of something isn't 100% that it happens. What's that, Rajat?
I don't think their PE ratio can go much higher, right? It's like like how people say, MicroStrategy's PE ratio can't, or their MNAV can't go past 2 or something. We shouldn't invest in it. But when you're looking at Tesla, their PE ratio is like 160.
What?
Yeah, it's crazy. It's insane.
160.
No, it isn't.
They don't make that much money. That's why their PE is like that, because they don't make that much revenue.
I'll share my screen.
Yeah.
I think we should actually take a couple minutes here before we get it further into Tesla. And I think it's worth noting here, like what the PE ratio is. You know, why do people actually own stocks? I think that the world's kind of lost their minds in that sense. Like for real, why do people actually own stocks? What are you putting your money towards there? Like, what's the point? Can we explain PE ratio a little bit here? Because this is something that I was completely unfamiliar with for the first 35 years of my life. And when I learned about it, I was like, this doesn't make any sort of sense.
So PE is go ahead, Forrest.
No. You go ahead, Rajat.
I was going to say PE stands for price to earnings ratio. So what it is basically the market price of the stock divided by how much earnings they have per year per share. So the higher that number is, basically the longer it takes for the company to make back the revenue, to make back the money that you're investing in terms of revenue. So let's say if it's 160 in this case, we expect that eventually Tesla's earnings will go up. So we're expecting that maybe the PE ratio will come down over time. And let's say in the case of Tesla, their PE ratio is at 160 right now. We might get our money back in, let's say, 110 years, right? Or 105 years.
100% of it, right?
Sorry?
100% of the money.
100% of the money. But then that it's based on the growth in inflation. They're beating inflation. If they can't beat inflation, then you're never going to get your money back.
Yeah. So a lot of that PE is they're not expecting Tesla to only continue making that same amount of money because of that high price the high PE. That is baking in a huge amount of growth. They're saying this company is going to grow into this ratio of price to earnings.
Right.
So that's something to be considered, because all stocks you're evaluating on future potential. You're investing in this stock now, thinking the future potential of it is greater than what it is now, even with inflation, money debasement, and everything that you should evaluate in as a metric. But that's a huge thing to grow into. And like I said, there's a lot of risks. There's a lot of potential.
I think eventually that's going to fall to like 15, 20, right? I'm guessing that's what would happen because that's the average for the S&P.
Yeah, I mean, maybe it could fall or Tesla could grow into it, right? It's kind of the same as
Right.
MNAV with MSTR, where MSTR's MNAV compresses down when people are selling and they think there's not as much growth in it, or they stack more Bitcoin and it actually raises it. So it's sort of this compression that happens on up and down, which is the same thing that happens with PE. Yeah.
Yeah, that I just think that that's such an important thing to understand, because I feel like most people's journey into like investing is like maybe they get a retirement account at work, they start paying attention a little bit, they just kind of see the stock market as just like this big machine that sometimes works, sometimes it's like a lottery almost, but it's like you're actually buying like a percentage of a company, hoping that they actually turn a profit, which they can return to you one day, essentially. But nobody really thinks about that. Nobody looks at the math objectively and says, okay, well, how much, is the company worth? What's their earnings today? How many shareholders do they have? What percentage of that earnings do I get? Nobody really does the math on that. And I think that that's where everybody should really start, is looking at the PE ratio. I mean, Tesla's a little bit of different, I would say. They're very much focused on the future. That's why kind of like the NVIDIAs are up there, the Microsofts, they're kind of locked into the technology side of things. But the big risk with Tesla for me, I love Tesla. I love Elon. They're kind of like the only Mag 7 company who's actually holding Bitcoin. But the reason why I think gold over Tesla, for somebody who's, a true investor, I should say, is because Tesla makes things. They are a technology company who makes things. So if the demand for Tesla products went astronomical, they could just make more products, and those robots are probably just going to make more and more products. And eventually the prices of those products, because of the nature of that industry, the prices of those products are going to come down over time in Bitcoin terms, maybe not in fiat terms, but in real terms. And so, yes, it's great to think that Elon's, going to be around forever. But somebody mentioned in the comments too, what if Elon dies? What if Saylor dies? I think both of those companies would look completely different. And if you look at what happened with Apple when Steve Jobs died, that company sure took a nosedive after their heartbeat left the company there. So it's a risk. And that's the point of what we were talking about there, is like these other options have risks. Like they have a CEO. Gold doesn't have a CEO. Bitcoin doesn't have a CEO. And that's kind of the point I think that we were trying to prove with that. So
Yeah, I mean, technology companies are always fighting against the deflation that is natural within technology, where their margins are always going to go down because it becomes easier and easier with technology to produce what they're producing, which is technology. Whereas something like gold is the exact opposite. It's a scarce asset. Bitcoin, even a way better example, of course, but we're comparing it to gold. Gold actually benefits from a deflationary environment because it's scarce and semi-verifiably. The other thing that we didn't touch on there was the gold being a bearer instrument. You can actually own it. With Tesla, again, any stock that you own, Jory, you mentioned you're kind of buying into this, expecting future returns to be given back to you. There could be a time when Tesla, I mean, how are they going to return any money to you? Like they're going to start paying a dividend, right? Like that's sort of what ends up happening with companies, is they start paying a dividend. They're just paying back people out of the value of their stock, but they could just never pay a dividend. And then the only way to get your money out of that is to sell it to somebody else. And then what is it that they're buying? They're buying ownership of a company that never plans to pay you back anything. I don't know. It just starts looking a little bit like Fugazi, nothing there.
yes.
With stocks. But that's just my opinion.
And that's the thing we got to keep in mind here too. Like the thing was based on performance, future. But I think it's important to know, like for me personally, like if I had $5,000 right now, I would probably put that $5,000 into Tesla. But that doesn't mean it's a better asset, right? That's just like me short term based on what else I have right now in terms of Bitcoin. I'm okay taking a gamble there because I still have Bitcoin over here that I know I'm going to have at the end of the day. But for people who have like 100% of their portfolios into this Fugazi and are really counting on Elon to live up to their expectations, I think that there's going to be a lot of people who suffer the opportunity cost of not storing it in Bitcoin or gold. But overall, I don't know. I like Tesla.
I think it's really crazy for people to compare companies like Nvidia to Bitcoin or Tesla to Bitcoin because they have so many more risks. Like you can't put all of your portfolio in either of those companies, but I think you could get away with putting your entire portfolio in Bitcoin.
Oh, good point, Rajat. Good point.
Yeah. It has way less risks.
Yeah.
So yeah, maybe expand on that, Rajat, just so we can kind of get inside your brain here for a sec.
So the way that I see it, Bitcoin is a global asset. Anybody in the world can access it. Anybody in the world can save everything that they have in Bitcoin, while not everybody can access Tesla or Nvidia. So Tesla and Nvidia have a lot more risks associated with them. For example, you have equity risk where just the company could fail.
Mhm.
You have market risk. You have regulatory risk. You have risks with your CEOs. There's all kinds of risks with stocks that you don't have with Bitcoin. So when you hold Bitcoin, you can actually put your entire portfolio in it because you know that it's not just going to go to zero all of a sudden because of some decision that somebody made. You're not relying your life savings aren't reliant on one person. On the other hand, with these stocks, they are.
Yeah, and the way I would sum part of that up is I hate to use these terms because they need to be expanded on, but the way I look at it kind of is Bitcoin is a risk off asset that performs like a risk on asset, whereas Tesla is just a risk on asset.
Yeah, everything that Tesla's doing is in the future. We have no idea if that's going to happen.
Yep.
That's
True.
what risk is.
Yep.
That's speculation.
Yeah, I just think that. Sorry, Rajat, go ahead.
I was going to say, in the meantime, while they're working on it, somebody else can come in and disrupt what they're doing. Do the exact same, but better, right? You can't do that with Bitcoin. Bitcoin is the discovery of digital scarcity. It can't be disrupted.
A lot of it too is like, I don't know, Tesla's main business is cars right now. And that's being propped up by regulation within the countries that they operate in. If there was no tariffs, which is regulation for China, the U.S. and North America, Canada, we would all be driving BYDs. They're so cheap, and they're just as good as Teslas. Like on a lot of metrics, like we would just do that because the market would just choose, hey, I'm going to get something that is almost as good for a fraction of the price. And the only reason people aren't doing that here in North America is because of regulations. And what's stopping a government from changing a regulation? Enough lobbyists come in, enough money comes in, some trades hands. Let's change the law. Let's make it easier. BYD all of a sudden takes over. I mean, they've taken over other markets that don't have the regulations that we have.